Hey Alpha Fam, welcome back to another episode of Alpha Commission. Today I've got a great one for you. We're going to go over the Grayscale Bitcoin Trust and compare that to the Bitcoin chart in order to just see if we can find some interesting points that maybe the smart money is looking at that the retail consumers aren't necessarily on these 24/7 exchanges. And then we're going to go over stocks, of course, and perhaps get into a little bit more detail about Bitcoin to understand what that might mean for the rest of crypto. So without further ado, let's jump in. As you can recall, that we had this blow off top in the end of 2017 on the Bitcoin chart, and from there it was just a severe dumpage for a couple years, right, until we made that kind of saucer bottom, and eventually had another bull run, fueled primarily by what can we say, stimulus dollars, right? So that was all a free ride. If this looks kind of like a bubble with rounded tops, probably because it is a bubble, right? So this has been just a huge bubble, and just unlimited free money bringing us to these price levels. Now, does that mean that there isn't some legitimacy in this? Could the asset have appreciated over that time? I mean, that's up for debate. It really depends on how you understand this class of assets, and different people will have different opinions. So right now on the Bitcoin chart, we're really just waiting to see if buyers are going to step in. If buyers step in and say that $30,000 is a good price for Bitcoin, then hey, maybe that was the appreciation of Bitcoin, right? I mean, yeah, we had this kind of bubbly zone up here, but now that the money is tapering off, maybe 30,000 is a good price. I don't particularly believe that the bottom is in. If you've been following my episodes, you'll understand my perspective on that. But we're here. We got a nice little bounce, and there is the possibility for some upside if buyers do step in. So, hey, buyers, we're waiting. Aren't you gonna buy all of this Bitcoin, buyers? Huh, they're not picking up the phone. Interesting. Okay, well, let's just go ahead and just remember the shape that we have on the screen, okay? Now let's go and jump over to the Grayscale Bitcoin Trust. And I think you're going to agree that there's something very interesting about this. First of all, this is just the last spring to our current setup here, based on the FTX chart. But you can see that the all-time high on the Grayscale Bitcoin Trust was actually put in on spring. That's interesting. On the Bitcoin, just a regular retail charts, the spring wasn't the all-time high. Actually, it was the winter. So we had an uptrend on Bitcoin, but we had a downtrend on the Grayscale Bitcoin Trust. Interesting, interesting. I think the smart money prefers the Grayscale Bitcoin Trust. So did they know something that we didn't know? Maybe. Let's go ahead and look at a fuller chart. Now we can see something else appearing here. Well, of course, I've pointed out that there's this kind of a channel, and there's also this kind of wedge. We'll see who wins. Oh, wait, look, the wedge broke down. The wedge broke down. The wedge, didn't break to the upside. It didn't get a bounce to the ceiling. We had a bunch of touches, and then we broke down. Okay, so we're still in this structure, but we should primarily consider that as just a downward channel at this point, and our hopes of a potential wedge breakout the way that sometimes these wedges do, that just is gone, right? So what can we say about this type of a structure? Well, if you get to the bottom of this one, you can see that we tend to have a couple bounces on the support, and we've really only had one bounce so far, right? Maybe we can just consider this a little bit of exuberance up here, and that this is our main channel. So, we've only got one bounce at the support right now. What would that suggest to me? It doesn't have to be the case. You can see this area right here. We got a nice kind of V-shaped bounce. But the fact that we are just chopping around, it would suggest to me that probably, we're going to chop it out a bit. We're going to chop it out a bit. And as long as we keep this support, then maybe we do have the chance of testing the top of this channel one more time for a modest bull run, which maybe doesn't lead into an all-time high or anything. Again, remember the Grayscale chart was already printing lower highs in a downtrend, since last spring, whereas the rest of the market was super bullish, saying we would go to 100K. The smart money was saying, no, we're not. And you know what? I went over this, months ago. And a lot of people were saying, well, that's kind of like a crazy idea. Why would these very well connected, highly political, wealthy people who have all types of advisors and who buy all sorts of data, why would they have any more information than the regular retail market? That's absurd. They had no idea what was coming over, coming up. Well, I just hypothesized that maybe they're smart money for a reason, which doesn't mean that they're any smarter than you or me, but maybe they have a little bit more information, right? And so, yeah, maybe this is going to chop out on their downtrend, and then perhaps we can pop up from there. But do you notice anything else interesting? Let me just show you the Bitcoin chart again. See this area up here? What's interesting about that? It didn't cross below the previous all-time high. Our price right now, well above the COVID era, all right? The pre-stimulus, pre-COVID era. Let's jump back to Grayscale. They've already corrected, almost as if they've front-run us. They've already corrected below the previous all-time high and are well on track to getting to that free money, that pre-COVID stimulus money era, right? And so if this does continue in that downtrend, that chop, that is going to bring us to some levels that we could consider, just immediately post-COVID or pre-COVID. And if this is smart money telling us that that's the proper valuation of Bitcoin, then what does that say about the current pricing of Bitcoin in the retail markets? Right? Are we just way overpriced up here? Or is this chart just perpetually bullish? Is there the chance that we could come down and actually break the all-time high? And if we consider the Grayscale chart, come into these areas around here, around that $14,000 that I was talking about as being possible. I don't know. But it's just interesting that Grayscale is almost in that area, as if they're front running the Bitcoin market. It's interesting that they had that lower high, almost as if they were front running the market, right? They didn't have the same conviction as the general Bitcoin market. So, not sure. They do have lockups, they do have certain fee structures, things like that, and so they have to plan quarters in advance. But maybe that means that they're really looking at the data for future quarters. whereas a lot of the people in this regular retail are just focusing on today. Just something to think about. Just let that sit in, sink in, and just muse. Maybe that's an important point. And there might be some relevancy here for stocks because I've been hearing Bitcoin being described as kind of the canary in the coal mine for stocks. And if you consider just how far Bitcoin has fallen already, right? So we've fallen 60%. And if you get that wick down there, 63%, right? Wow, just incredible. That the behavior of Bitcoin can actually let you know what some of these more stable stocks with more clear profit and loss statements, might be happening. And so some people might be saying, Bitcoin's doing a good job because it's holding this area. Stocks have been falling while Bitcoin has been holding this area. No, 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 no. You've got it backwards, right? Bitcoin fell 63%, right? And stocks have only fallen 29%, right? And so Bitcoin has actually fallen more than twice what stocks have fallen. And that's not a good ratio. That's not a good ratio. Bitcoin dropped faster and harder than stocks sooner. In other words, it was the canary in the coal mine for stocks. And now we're seeing some of the really big players like Walmart, etc., falling hard, but it's because it's their turn in the cycle, right? Like, of course, these like highly unstable assets with no profit and loss statements, super, risk on, of course, they're going to fall first. Like, that makes sense. That's where you're going to get your money out of the market first. And then you're going to put it in the safer assets. And then when the safer assets, start to, take hits one sector by one sector, you start shuffling the different sectors until you're left with just the safe stocks or the brand name favorites like Apple and all of that stuff. And then towards the end of that, you start seeing all these big names like really capitulating. And by then, Bitcoin will just be gone, right? It'll have already capitulated or it will have over capitulated. And so, is Bitcoin holding on strong or is it just at a inflection point while the rest of the market catches up to the amount that it's already fallen? It's an important question to ask because that could mean that Bitcoin has more to fall. And if Bitcoin does fall more, because it falls faster and harder sooner, that could be a very negative indication for the rest of the market. If the rest of the market also has a second wave of collapse. So all eyes should actually be on Bitcoin, whether you're from stocks or whether you're from crypto, because it's acting like a canary in the coal mine. It is not independent of stocks. It is not independent in any way from the stock market. It is just a tech meme stock with a whole bunch of money in it that actually is affecting the rest of the market. And in some ways, its pullback, its recession, right? Its bear market is a leading indicator for the rest of the market. So let's pay attention to that. And so without further ado, let's go ahead and just check out stocks. Yesterday, I was mentioning that, it was the CME gaps, the short-term CME gaps that we were supposed to be looking for. Of course, that's because, we had a pretty harsh collapse, and so there wasn't really much else to look for except, these possible areas that we might extend in order to fill those gaps. And on almost all of them, the NASDAQ, the S&P, the Dow, all of these things, we've had pretty much the same, the same CME gaps available on the chart. And you saw pretty much the same behavior, that we stretched up in order to fill the middle one, and then we dropped down and filled the bottom one. And now we're trying to determine if we have support or not. And if this ends up being support today, then perhaps we could pump up and fill those higher gaps. But there's something that's different today compared to yesterday. Not only did, of course, the tech stocks continue to just plummet, right? I mean, like, let's look at Nvidia, right? It just came smashing back down. Apple really smashing back down, almost double bottoming here. Tesla smashing down. All of these things just crashing down. So the tech stocks, it just doesn't bode well for crypto when tech stocks are crashing down, because this is their turn in the cycle. It could actually be an indicator that Bitcoin is about to smash down again as well. So we have to really see how the stock market holds this support now that everything is catching up with each other. They're all syncing up. The market is coming into this homeostasis of the new price-ins from the Fed based upon interest rates and everything that Chairman Powell said. And one thing that I wanted to point out is that it's not looking good. Today we have to consider something else. Today is not the CME gap day. Today is MACD day. Okay, you want to pay attention to the MACD on all these charts. Yesterday, it looked like we were going to have a bullish crossing, sort of like right here, right? And right here, where maybe we could at least get a mini run, if not a nice pump. But what happened? The Walmart news, just terrible results, right? The Target news, just terrible results. It just crashed the market down harder. Confidence just dropped out of the market. And what do you see here? You see stocks got rejected from the bullish crossover. And this is incredibly rare. This is incredibly rare. Look at the bottom of this turn here. There's no rejection here. Look at the bottom here. That's just a curving, not really a hard rejection. Look at this one. No hard rejection, just acceptance. All of these have very soft or gentle curves or acceptance. You go back as far as you want, right? And this is an extremely rare occurrence. Extremely rare occurrence that you almost had a crossover, but it didn't succeed. Here's one, but you had forward knowledge. It was already, its slope was already turning down a bit before it got the rejection. Here's one back in 2012. I'm not sure why I can't see my pricing. Let's see, back here. Was this it? Right here. Okay, let's go ahead and put this on the screen right there. And then, could this one count? Yeah, this one could count too. There's one right there. Let's see, get that perfect right there. So let's just examine these. And yeah, so you see this would have been the rejection right on there, and then you can see this crash down. See this rejection right here, and then a crash down. So, you know, those are the only two instances that I can find that are comparable, in the last years, that are comparable to what's happening right now on the MACD in terms of this kind of fake out rejection. Where we're pretty much aligned with the yellow moving average, but then we don't end up crossing it. We don't end up crossing both of them bullishly. It's just an extremely rare occurrence on these charts. And I think I can go over to the Russell. Very similar. It does have a little bit more positive momentum. The S&P, hard rejection. Dow Jones. Dow Jones was more of a giveaway, right? This one gave more foreknowledge, and it also had one right here, which was before that major crash. So this isn't good. Like, that setup is not good. But does that mean that we should short the market right now? Like, is everything going to go down? I don't know. Let's pay attention to this, because yesterday was about the CME gaps. Today is about the MACD. Pay attention to this MACD. If it can recover, if that was just a hiccup, if we can find support, then maybe we're going to put in those type of W kind of launch pads. But if we lose these supports, then history tells us that whenever we have those MACD fakeouts on stocks, that we are going lower. Okay, and it's very rare. Like, you don't see those fakeouts that often on the daily. Okay, so I don't think I need to actually say anything more about stocks. We're just watching that MACD. Doesn't matter how oversold we are, right? Doesn't matter how oversold we are. We're in the bearish control zone on the daily anyway. Look, we're breaking back down under, right? We're not bouncing off of it. We're starting to break back down under. So these aren't great signs, right? Like that could be something like this, where we have another leg to dip. It does appear that we might be rounding the bottom, but at the same time, we have no idea where this could end up. So yeah, we're oversold, and everything has a setup where it would like to launch back up. But the question is the same as Bitcoin. Where are the buyers? People are exhausted. Where are the buyers? Let's go to Bitcoin. There was a formation that I've been watching, this inverted head and shoulders. Let me get to an even smaller time frame. Yeah, 45 minute. Usually I don't trade on these time frames. It's just really too small for me. More of a swing trader. I don't like these 15 minutes and 5 minutes and whatever. But people might be wondering what's going on. And so we can see that we had a measured move from this inverted head and shoulders to kind of the this kind of point of control or whatever of this channel that we were on. And so if we bounce up here to 29,800, 29,900, that would be pretty much in line with the measured move. And then the question is, do we get a rejection from there? Are we effectively, just retesting the pattern that I was showing you yesterday, which is this possible head and shoulders, and getting a little bit of a fake out right now, where the measured move is like this, right? Which would also bring us to our fib Goldilocks zone, right? So perhaps we're just retesting this trend line, right? If this is just a trend line, just retesting it with this inverted head and shoulders, and then perhaps we're going to work our way back down to our golden fib zone, right? And from there, we'll have to test to see if that's going to be support. So this is how I'm thinking. I'm not really thinking about this small move. I'm really wondering, are we going to be able to hold this support around 28,500? Or are we going to be able to break above 3,000 and make a second attempt up here? Because if we are able to break back up into this pattern, then the measured move for a failed head and shoulders could be, like 33,000. Right? Could be 33,000. So those are the numbers that I'm looking for. Can we secure 30,000? And then if we secure 30,000, can we break 31,000? And then I would think, okay, maybe we're going to work our way up to 33,000. But if we end up getting rejected at, 30,000 or below, then I would suspect that we might end up working our way back down to 28,700-ish. And if we lose that 28,500, then I would just expect 27,500-ish, right? And then zooming out even further, we have this bear flag, on the chart, which I believe that I mentioned last time. And, the measured move for that bear flag could be as low as 23,000, which I mentioned is the top end of, my lower, moderate DCA zone for a bullish Bitcoin. Of course, if we have a global recession and all of that, then my lower DCA areas come into line. But I would consider this a DCA level. If this bear flag ends up working out, I would consider that a DCA level. This 25,000 ended up being a great DCA level, and then 30,000 also was a good trade. Not as good as the $25,000 one. But of course, the lower we go, the bigger the payoffs can potentially be, right? And so, yep, I don't think I need to spend too much more time on those formations. I think you get the idea. I showed you fib circles about 2 days ago. And one of my friends, Alex, he popped over into the AR Collective, and he was showing me how he aligned his fib circle, and I kind of like it. I kind of like the alignment here. You kind of have to play with these things. It's not an exact science, but if you're able to, align these things in ways that Yeah, it's kind of like seeing formations in clouds, right? Like you can't take it too seriously. If you take it too seriously, then you're going to end up, just confusing or misleading yourself. Because again, like shapes can appear in the clouds. It doesn't mean that it's a real thing. But when these patterns tend to pop up, time and time again, and then they end up working out time and time again, that's the basis of back testing. And so as we back test these ideas, maybe something interesting comes out of it. You can see this circle was a pretty major event, right? This circle was a pretty major event. This was a really nice dump. This was a really nice dump. This was a really nice dump. And look, we found support right on the edge of this circle. And then are we going to have a nice dump here or perhaps a pump? We're waiting for those buyers, right? We're waiting for those buyers. It's almost like we're retesting the circle here also, right? But one thing that you'll notice, this bear flag reaches right to the next fib circle. So that could potentially be a point of confluence if we do end up dumping, if the buyers don't step in. These concepts are a little bit more out there, and we don't need to put too much weight on them. Even these formations like head and shoulders, they don't always work out. So we might not end up in this zone, and maybe those DCA zones of 25,000 and 30,000, maybe those ended up being the correct ones. Maybe we do have a turnaround. But my guess is that people are going to be selling their Bitcoin. And that's going to be to cover their losses in the other markets. You don't need to hang on to your risk-on assets while your reliable assets are tanking. You're going to need to cover your losses somehow. And so what do? You take profits on your risky assets. And while Bitcoin is still above its 2020 pre-COVID levels, when a lot of people bought in there, right? This was a lot of time for a lot of people to buy in. A few years for people to buy into the market. They're still in pretty good profit. And if they need to cover their losses now, then this would be a good point to really consider to sell if buyers don't step in to pump up this market. And some people might think, well, right now would be a great time to pump also, because if we go to the daily, and we turn on our EMAs, you can see our 200 EMA is way overhead. Right? Like our 200 EMA is so far ahead that it looks like, in any normal circumstance, we'd want to just pump back up and touch it before continuing on our way. Pump back up and touch it before continuing on our way. Pump back up and touch it before continuing on our way. So potentially, potentially we're in a great spot for a pump. This thing will probably keep coming down, so maybe 35,000, even as high as 38,000, right? On the CME chart, we have a CME gap right there, right here at 35,000. So if we were able to pump up into those areas, it would fill the CME gap as well as help us check back onto our EMAs. But I'm not fully convinced. As you can see, on the way up, we were far away from our 200 for quite some time. And so I'm personally not biased to the concept that we have to somehow, check back and touch our 200 EMA right away. I just don't think we have to do that. I think that, let me invert this chart. Just like if we flip this chart upside down and we look at what happened here, like upside down, we can see that, hypothetically the inversion could be true, where we just continue to fall for a significant amount of time before we ever come back to check up to those 200 EMAs. And so let me invert it the right way. So you can imagine that we just get to this tipping point where buyers refuse to step in. People just want to sell because they're afraid that they're going to get lower prices later. And we have a second wave of capitulation. And the 200 just does something like this, right? Before price action, checks up. Maybe not this low. It could just be like here, right? But the point is that we could have a pretty good slide. And let's go ahead and take a look at 2018 to see what that would look like. And here you can see pretty much the identical setup. 200 MA up in the air, gonna find its way down eventually. 200 EMA cutting across, losing its footing, and then slipping down until it comes to meet with the 200 MA. And what does price action do during that time? Drop and chop until it finally rounds out. And then you're going to have a nice run at least to cover these 200 EMAs, if not more. You saw this was a nice bounce. But you can see that this could take some time. Like we don't have to just pump up and touch those 200 EMAs on the daily, right? And how could I convince you further of that? Well, if you take a look at the weekly, the 200 EMA is under us. So which one has more power? Those macro EMAs or the more local EMAs? I would hypothesize that we're being led by the macro right now. We're not being led by just daily trades. We're being led by the macro economics, the macro cycle. And so from my perspective, we already touched the 200 EMA on the weekly. And so Bitcoin chart is fine doing what it's doing. It's happy. It's okay. And so perhaps sideways or down, right? Depending on the news that we get. I'm not fully convinced that we're just going to pop up. Maybe we do. Maybe we do. We're very close to that 30,000. If we could get to 30,000 and then 33,000, it could just infuse the system with bullishness. Everything seems to want to go. You know, people want to start making money again. But the EMAs are satisfied. And if we look at the monthly, like there's not even a 200 EMA on this chart, right? I think I have to go to the 2-week. No, even the 2-week doesn't have one. So it's low, right? It's low. Let's see if I can get anything on the screen. Let's try 150. Okay. 175. Let's do 190. Okay, so good enough. But 199. Nope, okay. Okay, 195 is the most that I can see on the 2-week. And that's down here at $12,000. Which is in that pre-COVID, that just that pre-COVID era, before all the stimulus money. That's where that is. Could we have just a major cycle correction where we come down to our 200 2-week EMA? It's possible. It's possible. There is some pull to the downside on us. We've not done it before. We've never done that before. But look at this exaggeration during the COVID dump. Like, we went pretty far. I mean, we just don't have enough data to track this out, but one could imagine, one can imagine that this chart is slowly coming to its 2-week 200 EMA. And so I don't put it past Bitcoin, okay, to just continue sliding. I don't need to ask it to bounce right now. It doesn't need to bounce. If it does bounce, good. But there are lots of factors in the world right now that we're going to be looking for. For example, is the Fed really going to be serious about inflation? They haven't proven it yet. They've said that they are, but they haven't proven it yet. So in June, we need to see that. And if they are they going to hit us so hard that it knocks us out of our shoes and kicks the legs out from under us and we just go falling? Is China going to reopen or is it going to tighten, its supply chain restrictions, which is where we get all of our stuff from because of the new COVID outbreaks in China? Are they really going to support like a Bitcoin mining and all of that stuff? Or are we going to hear about a new Chinese crackdown on tech? Because suddenly they're letting, some activity go on again. And so is it just setting itself up for another crackdown? I don't know. Seems like every other month China's cracking down on technology. And have we reached maximum pain in the war with Russia yet? Where we're kind of in a stalemate position and we have to concede some territories. Ukraine has to concede some territories. Europe is taking a big hit. And if Europe falls into a deeper recession, I mean, the rest of the world is not going to be immune from it. And the US might already be in recession. It's just we need another quarter of GDP growth or contraction to understand if we are. So, yeah, summer could be big news time, okay? Like, summer could be the catalyst to either pump us up or to just drop us down to hell. And then, most likely, if we get the drop, that'll be the final capitulation, and then it's going to be sideways for a while. As for today, we have the VIX pumping back up, Are we going to get these super high numbers like, 35, 40? A lot of people in the market, they want to see 40. They want to see us really stretch this volatility out to these like peak levels before we see a contraction down. You see this right here? 50, 50, 48, 48. See, those have always been the peaks of these really nice downturns. It signals the bottom of the market when volatility maxes out along this like 45 to 50 area. So these guys in the stock market, these big players, they want to see 40 to 50, like something solid in there. They want to see something 40 to 50 on the VIX before they'll say we're at the bottom of the market. They want to see volatility get just extreme. This yellow line is this orange line is this is extreme. They want to see it get super extreme before they're willing to call the bottom of the market. And so, hey, it could be that we're in the bottom, but some pretty big players are looking for 40 to 50 on the VIX. And we haven't seen it yet, but we saw it here, we saw it here, we saw it here, 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 right? Here, here, before we had those major downturns in volatility that brought us back to stability so that we could have nice trading days. We had to see those super high numbers. And so most likely we're going to still be in a downtrend until we get to around, at least 40 to 45, in my opinion. And then we do have good news, however, which is probably why Bitcoin is able to kind of trade up today. The VIX continues to pull back, and we're just watching these kind of support areas to see if it can hold this 102 or if it breaks down from that 102 area. And if it bounces back up, that's going to be bad news for markets. If it continues to retrace, that's going to be great for markets, right? Like if we could get a retracement to 101 or perhaps even 100, Just a nice solid pullback that would just give markets enough space to bounce. It's the dollar has been so strong. It's just been oppressive. BTC dominance looking like it wants to skyrocket. I'm not sure why I have that circle. But all these EMAs on its weekly are still pointed down. See how the dailies look. Dailies, very supportive. I mean, this is bullish. It's like a 5-day. Yeah, I mean, on the 2-day, you know, we could end up getting surprised with a nice major squeeze on Bitcoin dominance. I mean, this thing could just pop up. Kind of like here. See that? And what would that mean? It could mean that money is fleeing into Bitcoin and getting out of altcoins. Or it could just mean that money is fleeing the entire market and just Bitcoin is left. Right? It's not necessarily good or bad news. It just depends if the price of Bitcoin is going up as well. But you know, Bitcoin's price could stay the same and its dominance could go up. It just means that people are leaving altcoins, right? UST. Just in those crazy high levels where it tends to max out at, but it doesn't look done yet. It is attempting to find its way back up. It's the daily. But looking kind of toppy actually, so also a good spot for a pullback perhaps and a run. Just have to watch this. You see what happened here, right? Like this. Just nice pullback for a while. You know, some type of burst and fits and all of that. And then it had another spike up though, right? Same thing here. So perhaps, to be honest, I don't know. To be honest, it doesn't look super great, okay? Like, it could do something like this, right? Before coming back down. Sort of like this. Sort of like this. You can't really trade the market from this chart. This just shows you that, you know, money is leaving or it's being held in reserve, you know, on the exchanges because USDT is itself a crypto, right? Or if it's being put into coins. But you don't really know what's happening in the market. It's just a nice kind of like a oscillation indicator. This nice oscillation, right? But you guys know I had these levels marked out like way back here, and I was telling you guys like this thing could go higher. Like it was looking like it wanted to break through, and that this was likely going to be a bigger crash than most people in crypto were ready for. And I set these levels out, you know, assigning this as kind of like a midline, and then hypothesizing a top here. And we exceeded the top that I hypothesized. So we can in fact go higher as people flee this market, potentially. ETH dominance looks like the opposite of Bitcoin dominance. This doesn't look super bullish to me. This one almost looks like it. I mean, it looks like it. Well, I don't know. We can give it more space, but perhaps this thing is going to test lower. Yeah, I do not like this lower high here. I mean, it's just interesting. Bitcoin's dominance looks like it wants to pop up. It's got that higher low, but ETH's dominance has that lower high. So I would expect ETH to come down with the rest of the market as opposed to being a safe haven like a Bitcoin. I think Bitcoin's going to be continuing to fulfill its function of the crypto safe haven. And one reason why Bitcoin may be staying relatively flat right now while the stock market is dumping is a lot of altcoins, a lot of altcoin holders may be just putting their money in Bitcoin right now. And so they're kind of propping up this level temporarily. But that level will break if the market continues to turn down. Then those guys who fled to Bitcoin as a safe haven, they're going to end up fleeing to US dollars or USDT. And so again, like all of this ties together, right? I just showed you USDT and I just showed you the DXY, the dollar. So we have to pay attention. Altcoins could get hammered. Whether Bitcoin goes up or down or sideways, altcoins could get hammered as that Bitcoin dominance continues to rise. And it might be a good time to start thinking about moving some altcoins into Bitcoin if you haven't yet. If you wanted to stay in the market as opposed to being in cash, right? Which is also a good strategy. You don't have to be in this market. You can just wait it out. And what I say are the bullish conditions for when you might get back in. You don't need to get the absolute bottom. You just need to see your EMAs turn bullish. That's all. Just cross bullish. If they cross bullish, then you can say, okay, I'm going to come back in, and then I'm going to ride the curve up. And if they cross negative again, then you get out. Because they're going to end up, the price is going to end up going down again. That's simple, right? You just wait. I don't even know why I've been trading so much. Literally, I can just trade off of like bullish and negative crosses on the EMAs on the weekly. And I'd probably be in better shape than if I had been, trading every day. Over trading or getting into exotic things like IDOs and blah, blah, blah. Which is where I took a big hit this cycle, right? I mean, I'm just like you guys. I'm also taking hits. I got trapped in some IDO coins. They can't. They're not even released. I'm like just in them. They're just like dying with the rest of the market. A lot of, a lot of value in that. And there are people who warned me about that, but we all have to learn our mistakes. And every time you experiment with something new, you have to learn everything all over again. So sometimes it's good to just to become an expert at one or two things, that you enjoy about the market. Maybe that's NFTs, maybe that's swing trading, EMAs, maybe it's scalping on the 15-minute, right? But whatever you do, just become really excellent, in those one or two things and stick with it until you can really be consistently making your money. Because every time you switch over to a new thing, like if you jump from swing trading to NFTs, you're probably going to end up losing a lot of money. If you go from NFTs to trying to scalp on the 15-minute, the 5 and 15-minute, you're probably going to lose a ton of money, right? If you go from, spot trading to leverage trading, you're probably going to end up losing a lot of money. Like pick one or two things and just get really good at it. If you can identify negative and bullish crossovers on the weekly or the 5-day, then just trade those, and do a really good job at it, right? I'll show you. Bullish crossover, get in the market here, right? Negative crossover, get out here. Bullish crossover, get in here. Negative crossover, get out here. Bullish crossover, get in here. Negative crossover, get out here, right? It became bullish really quick, but you could make an assessment that this is flat. Just stay out because it also had a negative one again. Bullish crossover, negative crossover, bullish crossover, negative crossover, bullish crossover, negative crossover. You're out. You're out right now. If you're an EMA, a macro EMA trader, you're out. Right? This is the 5-day. The weekly, there's even going to be far fewer trades. Right? The bigger your time frame, the fewer trades there are going to be. And so over the course of like 2 years, maybe you only had, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trades. Over the course of like 2 years, maybe you had like, a dozen trades. Approximately one every 2 months, right? On average. And you would have made this money, 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 and this money, and this little money right there. And you would have been spared all of this pain, all of this pain, all of this pain, a little bit of this pain, all of this pain, and then all of this pain. Literally all you had to do was one trade every 2 months on average, and you would have been ahead of almost every trader in the market, right? Except for the super excellent, leverage traders who just are highly professional. Because you would have known what you were doing and what you were looking at. But if you were distracted by all of these things, if you were distracted by NFTs, if you were distracted by, scalping one day and flipping some things and chasing the next meme coin and, getting all up in Luna's business and, just getting distracted, doing IDOs, right? Like you don't know the fundamentals of all that stuff. They're new projects, they could fail. In a crypto winter, all those IDO projects could die, right? But maybe you're an expert at those things. Maybe you really know everything about IDOs. Maybe you're the best, maybe you've become a millionaire at IDOs. Like stick with that stuff. Don't confuse yourself. All right, guys, this was a pretty long one, but just wanted to have a discussion because a lot of people are going to be pressuring you to be getting in the market, but understand what your standards are. Understand what strategy works for you. If you're a scalper, you don't need to worry about what people are saying, like on these, we'll never see under 30,000 again. How many times have I heard we'll never see under 30,000 again? I've heard that so many times. And we just keep seeing under 30,000 like time and time again. Like people say, "Oh, we'll never see under 20,000 again." Okay, I mean, unless we do, right? Like, so if you're a scalper, just scalp and always be taking your profits. If you're a swing trader, swing trade and just be sticking to your principles of your EMAs or whatever, oscillators you use, right? There are a lot of indicators to use, and you don't need to use as many as I have. I'm just looking for topics to talk about on video, right? Whenever I look at all of these oscillators and things, I always just use like a 2 at a time. I'm not using like all of them at one time. Maybe I'll match up 3 just to double check, you know. But really, I'm only looking at 2 primarily, which is the RSI and the MACD. Same as most traders in the world. They're looking at the RSI and the MACD. And then, of course, I'm an EMA trader. That doesn't mean that you have to be an EMA trader, but I'm an EMA trader. So I also look at EMAs. Now, some other people, they might be looking at, fixed volume, getting these type of, volume ranges going on. They might be looking at fibs, right? And so they get the Fibonacci's out. And they might be blah, 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 right? They might be using fib circles, right? Show you the fib circles, right? Things like this, looking for areas of confluence, blah, blah, blah. Just get really good at like 2 or 3 of these things, and that's it. Just get really good at 2 or 3 of these things, and then 1 or 2 different methods of trading. And you're going to be able to make yourself consistently profitable. Don't look at all these indicators and think that you have to know all of them or have all of them or blah, blah, blah. It's not going to help you. It's not going to help you. And many times it can actually confuse you because half of these will be pointed in a different direction than the other half. And you don't actually have a strategy for which one lines up with which. Like if you just mix and match and you haven't done back testing to see like how that mix and match like works out, like whenever they have crossovers. Earlier I had something on my screen that I hid. Yeah, this one. See all these lines? This is because I was doing back testing of a strategy. I wanted to see if this strategy is working. And you can see, like I would have sold here. I would have gotten in here. This is not an EMA strategy, it's just a different indicator. I would have sold here based upon this new strategy. I would have gotten in here. I would have gotten out here. And I didn't get a signal to get back in yet. So, using this new strategy, I would have been saved all of this pain, and I would have made all of this money, and I would have made all of this money, and I would have saved all of this pain. This is the new strategy that I'm working on. I would have saved this pain, would have made this little bit of money, saved this little bit of pain, made all this money, right? You can see like this was a great strategy. And if I had a shorting strategy, I could have made money on the downside, right? Just I don't do leverage, so I don't short. And look, this new strategy that I'm developing, it also told me to get out here even before COVID, like many days in advance. So I would have been saved all of the COVID pain, but I still would have gotten this kind of little pump here. I would have been spared this pain, made all that money, spared all of this pain. So don't dismiss that this strategy I'm working on hasn't told me to get back in yet. Okay, like if this strategy is telling me don't get back in yet, then I'm going to listen to it because I'm back testing this thing and it's working out really well. These yellow lines are points of confusion, right? So you should always mark where the strategy didn't work that well. And just here, during this kind of like epic bull run, you know, it had a couple little hiccup points where, you know, either I should have gotten out, but it didn't tell me to get out, in which case I would have been fine overall. But it still was a significant drop there, and it should have told me to get out. And then right here, I think it told me to get out or something, but I shouldn't have, or something like that. But yeah, so guys, you have to backtest your strategies also, and they don't have to be perfect. They don't have to be perfect, but if it's pretty good, it's pretty good, right? Like it's better than being confused or not knowing what's happening. And this is only using 2 indicators. And then I would, of course, because I'm an EMA trader, I would add EMAs on top of that. And then that would be the 2 or 3 indicators that I'd be using. And then I would just be using one trading method plus my other trading method, which is EMAs, right? And then that would be what I would be using for my main trading, for swing trading. Okay, guys, really long episode. Sorry about that, but that was your alpha for the day. Stay safe and happy trading.